Welcome to our deep dive this week. We're looking at a market that feels like it's shifting under our feet with trade tensions and a whole bunch of economic data set to come out that could really shake things up.
Yeah.
We've got in-depth market analyses and, those economic calendars to guide us. So let's just jump right in.
Yeah, it's interesting here. We're not just looking at, events that are kind of isolated from each other. We're seeing a lot of things converging at the same time. We've got trade wars, we've got worries about inflation, we've got tech earnings all coming out, and the market's already on edge. So
yeah, it feels like the stakes are pretty high this week.
Yeah.
So let's get into specifics. What events are you really looking at that have the potential to move the market this week?
Well, one thing to keep in mind is that the S&P 500 has dipped below its 20-week moving average.
Okay.
Now, that's not necessarily a reason to panic on its own. Markets fluctuate even when we're in a bull market, but it does suggest that sentiment is maybe starting to shift a little bit.
Okay, so we should be paying attention to some of these technical signals. What else should we be watching for?
Well, the week of March 10th is just packed with economic data that's really important.
Okay.
We've got the Consumer Price Index, the CPI,
right,
and the Producer Price Index, the PPI.
Yeah.
Both of which are really key indicators of inflation.
Right.
And, the market, as you know, is very sensitive to any indication that inflation's rising.
Yeah, right, because that could influence what the Fed decides to do with interest rates.
Exactly.
So these inflation reports are kind of a big deal.
Big deal.
What else is on that economic calendar?
Let's see. We also have the JOLTS report, which tells us about job openings and labor turnover. So it gives us a little peek into the health of the labor market.
Okay.
And of course, we can't forget initial jobless claims data, another, very important piece of the economic puzzle.
Yeah, it seems like we're going to be getting a pretty comprehensive checkup on the U.S. economy this week. But on top of all of this economic data, we've also got a tech giant stepping into the earnings spotlight, Oracle.
That's right. Yeah. Oracle's earnings report on March 10th is going to be significant.
Right.
This is a company with a huge market cap.
Right.
So their performance can definitely send ripples throughout the tech sector as a whole.
So analysts are predicting earnings per share of 1.49 on revenue of 14.39 billion. But what will you be looking at specifically in their report to gauge the health of the tech sector more broadly?
Yeah, that's a great question. It's not just about meeting or exceeding those top line numbers.
Right.
I'm going to be looking very closely at their cloud revenue growth.
Okay.
That's a key indicator of how well they're competing in that cloud space, which is, really a major battleground for tech companies right now.
Right.
I'll also be analyzing their operating margins to see how they're managing their costs in this, environment where we have such high inflation.
That makes sense.
Yeah.
It's not just about the overall numbers, but what those numbers tell us about the trends that are happening underneath in the tech sector.
Right.
Okay, so we've got economic data and tech earnings on our radar. We also have to talk about these trade tensions.
Of course.
They seem to be like this constant source of uncertainty for the market.
Yeah, absolutely. The ongoing trade disputes, particularly, the ones with China, Canada, and Mexico,
right,
are really injecting a lot of volatility into the market that's hard to ignore. And, these aren't just political squabbles.
Right.
They have real-world consequences for businesses and for investors.
For example, last month, we saw consumer discretionary stocks take a hit. Could that be a sign that people are starting to feel the effects of these trade tensions?
It's definitely possible, if companies are having to deal with higher costs because of tariffs.
Right.
They might have to raise prices.
Yeah.
And then that might lead consumers to tighten their belts.
Right.
And if consumer spending weakens, that could have a domino effect on the whole economy.
So are these trade wars starting to show up in consumer behavior?
Potentially.
That's definitely something to keep in mind as we look at the data coming out this week.
For sure.
Now, we've talked about how U.S. markets are reacting to these trade tensions.
Yes, right.
But I'm curious about the global perspective. Are we seeing, similar trends in other markets?
Well, one really interesting dynamic that we're seeing is the divergence between U.S. and Chinese tech stocks.
Right.
While U.S. tech giants have seen some declines, tech stocks in Hong Kong have been surging since January 27th.
Wow.
It seems like investors might be looking for opportunities outside of the U.S. market.
So are investors betting on Chinese tech as a safe haven from all the U.S. trade issues, or is there something else going on?
I think it's probably a combination of factors.
Okay.
On the one hand, Chinese tech companies are really benefiting from government support,
right,
and they have this rapidly growing domestic market.
Yeah.
But on the other hand, there's also a sense that the U.S. tech sector might be facing some headwinds, not just from these trade tensions. but also from potential changes in regulation and some concerns about a slowdown in innovation.
So the global tech landscape is shifting, and that's creating both risks and opportunities for investors.
Exactly.
Sounds like diversification is more important now than ever.
Absolutely.
So we were just talking about how these trade tensions are adding to this volatility in the market.
Right.
Let's unpack that a little bit, because these aren't just, abstract concepts. They have real consequences, for companies and investors.
Yeah, definitely. The challenge is that we're dealing with multiple trade disputes all at the same time, and each one has its own, complexities and potential consequences.
Right.
The U.S.-China trade war, for instance, has been going on for years,
Right.
and continues to impact global markets and those supply chains.
Yeah, we've come a long way from just those, initial tariffs on washing machines and things.
Yeah.
What's really at the heart of this ongoing tension with China?
Well, it boils down to some fundamental disagreements about trade practices, intellectual property rights, and just, economic competition in general.
Right.
These issues run really deep, and this recent, escalation of tariffs is just adding fuel to the fire.
Speaking of escalation, China just announced retaliatory tariffs on certain U.S. imports effective March 10th.
Oh, wow.
The timing on that couldn't be worse, considering, we've got this volatile week already ahead of us.
Exactly. This back and forth with tariffs creates so much uncertainty for businesses.
Right.
They're left trying to deal with these disrupted supply chains, increased costs, and the possibility that demand will go down if they have to raise prices.
Right. And if businesses are struggling, that ultimately impacts investors and the economy as a whole.
Exactly. It's a domino effect.
Yeah, it's a domino effect.
Yeah.
So the trade war with China, casts a really long shadow, but we can't forget about the tensions we have, closer to home.
Right.
We have tariffs imposed on Canada and Mexico, our North American neighbors,
Right.
that have also sparked some concern.
For sure.
It does seem kind of strange to be engaging in trade disputes with our allies.
Yeah.
What are the potential consequences of these tariffs, for Canada and Mexico?
Well, both countries have said they might retaliate with their own tariffs on U.S. goods.
Okay.
And Canada has already announced that they are going to impose tariffs on certain products.
Wow.
So this situation has the potential to disrupt that, complex web of trade that connects our economies.
Yeah, considering how closely our economies are tied to Canada and Mexico, a trade war could have some far-reaching consequences.
Absolutely. Think about the impact on industries that rely on cross-border trade. Automotive manufacturing or agriculture.
Right.
They're caught in the middle,
Yeah.
facing a lot of uncertainty and potential disruptions to how they do business.
Yeah, it's a good reminder that these trade disputes aren't just, abstract political moves.
Right.
They have real impacts on real people and real businesses.
Absolutely. And the fact that they're so unpredictable makes it even harder for businesses to plan for the future.
Right.
It's like trying to navigate a landscape that's constantly changing.
So we've got these trade wars creating this backdrop of uncertainty. But what about the bigger picture, the geopolitical landscape? Are there other potential hotspots that investors should be keeping an eye on?
Well, the conflict in Europe, specifically what's going on between Russia and Ukraine, is definitely a concern.
Right.
It's adding to this economic and geopolitical instability in the region, and the effects are being felt globally.
Yeah, we've already seen the impact on energy prices and supply chains. Not to mention the humanitarian crisis that's happening.
Exactly, and the situation is constantly evolving.
Right.
There's always the potential for things to escalate further. So investors need to be aware of those geopolitical risks, because they can really affect market sentiment and how people make investment decisions.
Are there any other geopolitical risks on the horizon that you're keeping an eye on?
Well, tensions in the Middle East are always something to watch. The conflict in Yemen, Iran's nuclear program, the Israeli-Palestinian conflict, all of these represent potential flashpoints that could, trigger broader instability in the region.
So it sounds like investors need to be paying attention to a lot of different geopolitical risks, right? In addition to the economic data and corporate earnings that we've already talked about.
Yes, definitely.
How are all of these geopolitical tensions actually playing out in the market right now?
Well, we're seeing a rise in anxiety in the market, and that's reflected in the VIX, which is often called the fear index.
Okay.
And it's been trending upwards, which suggests that investors are increasingly concerned about this unpredictable global landscape.
So how is that impacting how different sectors are performing? Are investors changing their focus?
Yeah, we're seeing a rotation away from sectors that are seen as more vulnerable to geopolitical risks, like technology and consumer discretionary. And there's a move towards sectors that are considered more defensive, like healthcare and utilities.
Interesting.
It's that classic flight to safety response.
But earlier we were talking about how U.S. and Chinese tech stocks are kind of diverging, with Chinese tech companies doing well while U.S. tech giants face headwinds.
Right.
How does that fit into this bigger geopolitical picture?
It's an interesting dynamic. On the one hand, you have these U.S. tech companies dealing with trade tensions, potential regulatory changes, and worries about innovation slowing down.
Right.
And then on the other hand, you have Chinese tech companies who are getting support from their government and have a rapidly growing domestic market.
Yeah, it almost feels like a decoupling of those two tech sectors.
It does.
What are the implications of that for investors?
It really highlights the importance of diversification and looking at things from a global perspective.
Right.
Investors need to look beyond their usual comfort zones and think about the opportunities and risks that international markets offer.
This seems like a great time to dive into the domestic economic picture, especially with those big data releases coming out this week.
Yeah, for sure.
Let's shift gears and focus on what those reports might tell us about the health of the U.S. economy.
That's a great transition. Those economic data releases are really important pieces of the puzzle.
Yeah.
They're going to give us some insights into those underlying trends that are shaping the U.S. economy, which in turn influences, market sentiment and investment decisions.
So we've covered a lot of ground, from those global trade wars to how the tech giants are performing.
Right.
Now let's zero in on the U.S. economy and those key economic reports that we keep talking about.
Yeah, those reports are going to be like, peeking under the hood of the U.S. economy. They'll give us an idea of what's driving growth or maybe, holding it back.
And some of the early indicators suggest that, there might be reason for concern.
Yeah.
The Atlanta Fed's GDP Now model, which, tracks economic growth in real time, has been revising its projections downward. What's behind that shift?
Well, it's a mix of things, but those trade tensions we talked about are definitely playing a part. They create uncertainty for businesses, they mess up those supply chains, and they could potentially reduce investment.
And then there's inflation, that persistent shadow hanging over the economy.
Right.
The CPI and PPI data this week will be crucial for understanding, how deeply embedded inflation really is.
Yeah, if those numbers come in hotter than expected, it could be a sign that we're in for a longer fight with inflation than we thought.
Right.
And that could force the Fed's hand and maybe lead to, more aggressive interest rate hikes.
That's a scenario that a lot of investors are worried about.
Yeah.
Higher interest rates can make borrowing more expensive for businesses, which could slow economic growth and hurt corporate earnings.
Exactly. It's a tough balancing act for the Fed.
Yeah.
They're trying to control inflation without causing a recession.
Right.
This week's data is going to give them and us a clear picture of, what we're up against.
So let's dig into these reports. First up, the CPI on March 12th, which is the main measure of inflation for consumers.
Yeah.
What are you going to be looking at closely in that report?
I'm going to be looking beyond just the headline number, and digging into the details.
Okay.
For example, I'll be checking out core inflation, which doesn't include those volatile food and energy prices, to get a better sense of, those underlying inflationary pressures. And I'll also be looking at how different categories are contributing to overall inflation. Things like housing, healthcare, transportation.
It's not just about the big number, but what's actually driving it. Okay, so next we have the PPI on March 13th. How is that different from the CPI and why is it important?
The PPI is all about inflation at the wholesale level. It tracks the prices that producers are getting for their goods and services.
Okay.
So while consumers don't feel it directly, those price increases often trickle down and eventually affect consumer prices.
So it's like a preview of potential price hikes that consumers might see later on.
Got it.
What should we be watching for in this report?
I'll be paying attention to price trends in key industries like manufacturing, energy, and transportation.
Okay.
If we see any big upward pressure in those sectors, it could mean that, broader inflationary pressures are building in the economy.
Okay. Then there's the JOLTS report, which gives us insights into the labor market. What are the key takeaways that you'll be looking for in that report?
The JOLTS report helps us understand how dynamic the labor market is. Are businesses hiring? Are people feeling confident enough to quit their jobs and, look for new opportunities? I'll be looking at things like the number of job openings, the hiring rate, the quits rate, to get a feel for the overall health and momentum of the labor market.
It's a good way to measure, worker confidence and how vibrant the economy is. We also have reports coming out on retail sales, industrial production, and consumer sentiment this week.
Yeah.
These data points all help paint a more complete picture of the U.S. economy, don't they?
They do. Retail sales give us a peek into how consumers are spending. which is a big driver of economic growth. Industrial production tells us how much those factories and mines are producing, so we get some insight into the health of the manufacturing sector.
Okay.
And consumer sentiment shows us how people are feeling about the economy overall, which can influence how they spend and invest.
So we're going to be getting a very thorough economic checkup this week. But ultimately, the big question is, how will the Fed react to all of this data?
Well, their next meeting is on March 18th and 19th, so they'll have a bit of time to digest everything, but they're definitely going to be watching closely. If the data shows that the economy is weakening or that inflation is still really high, it could push them to act more decisively.
And what could that action look like? Are we talking about more aggressive rate hikes?
It's possible. They could also signal that they're thinking about speeding up the reduction of their balance sheet, which would essentially tighten monetary policy.
So we're going into a week where those data releases could really move the market. It's a lot to take in.
It is, but these reports give us valuable insights into the economic forces that are shaping our investment landscape.
Right.
The more we understand those forces, the better equipped we are to navigate the challenges and take advantage of the opportunities that are out there.
That's a great reminder. As we wrap up our deep dive this week, what are your key takeaways for listeners as they go into this really crucial week?
I'd say stay informed, stay flexible, and be ready to adjust your investment strategy as things change.
Okay.
This is a fast-moving environment, and knowledge is your greatest asset.
Great advice. We've explored market volatility, trade wars, tech giants, and the U.S. economy.
Yeah.
It's definitely a complex landscape, but as you said, the more we understand it, the better we can navigate it.
Exactly. In times of uncertainty, those who are open to change and adapt their thinking often come out ahead.
Right.
So keep learning, keep asking questions, and keep exploring.
And on that note, we'll conclude this week's deep dive. Until next time, happy investing.